The title for this is simply Play to Earn, Trend or Fad. And I guess just before we kind of introduce the panelists, who here is kind of would say that they're familiar with Play to Earn gaming as a concept? Yeah, it's just a couple of people, 3 people. Okay, and people anyone who's actually played a Play to Earn game? Oh, one on the back. 2. Okay. So let me introduce the panel. So Jeffrey was obviously on our previous panel. We have Jamison, who has extensive background in gaming, iGaming, and play-to-earn gaming, I think is fair to say. And Rahul from Irreverent Labs, who has a fireside chat with Pierre later, is very much in the heart of kind of play-to-earn gaming with the game that you're currently developing. Maybe we start off with just a bit of a definition of play-to-earn gaming.
Sure. Well, I personally hate the term play-to-earn. I think it creates sort of the wrong behavior. As somebody who's been in the gaming industry, and when I say gaming industry, I mean the gaming industry for my entire career. Really, it's just about play and like have fun. If you make a game that's really great, then the future of gaming to me is about not so much like the earning or whatever. It's more about the agency and the ownership of assets within the game itself. And so when you play, a 45-minute game, you want to walk away with more than just like a win or a loss. And that utility lasts only so long. You want it to accrue to something much bigger, and that's kind of the future of the space.
Interesting, Jamison. I know you've got some kind of views on the history of play-to-earn gaming. Do you want to share some?
Sure. I just think, like many things in our world, we come up with new definitions, new buzzwords, and everything old is new again. The concept of play to earn is nothing new. I mean, it goes back. It's one of the oldest mechanics ever. It's a carny game. Throw the baseball, win a prize, right? The idea of I can play a game, I put up a stake, I play a game, and I can win something of perceived value or claim something of perceived value, whatever that might be. That's been around a very, very long time. It goes back to some of the earliest games of skill in those situations, and it's worked all the way through the rise of video games. And there were secondary economies as far back as Ultima Online, where players would grind and earn and then sell the items that they had created in the game to other people, and they would trade money on the side. They would, you'd drop your sword at the feet of your friend, he'd pick it up, and then he'd give you $5 the next day at school.
Yeah.
Right. So that concept has been in and baked into just games in many, many ways.
And way before blockchain, right?
Way before
centralized.
Way before video games.
Yeah.
I mean, there's nothing new about putting up something of value and playing a game. We were talking about baseball cards in the last panel. People used to play, marbles. My dad and his brothers would play marbles for baseball cards. Right? It's that idea that they get something out of the game, something that changes the experience for them, experience of play. So, but I think that idea that it gives more than that it creates some type of an agency or some type of an experience, is far more interesting to the topic.
Interesting. Okay, and then so that's kind of pre-blockchain. Then blockchains come along, and this kind of play and earn, whatever the terms are. What's the difference, Jeffrey? Maybe what's happened from what Jameson's talking about to play to earn on a blockchain?
The gatekeepers, in respect to who's responsible for the ecosystem and where the assets reside and who owns them. Ultimately, when you're playing a game like Ultima Online or many of the traditional AAA video games, terms of service, your EULA, basically confirms that all of the assets, all of the IP resides eternally with the company that published the video game you're playing. Whereas, there's an extension of that in respect to Web3, where you have your own self-sovereign identity with your own Web3 wallet, which can hold these assets, and you reserve the right to resell that with whatever permissions are granted to you inside the EULA. And I think there will be different perspectives on that. And that allows the consumer to, in theory, use it for other means, although for the most part that doesn't really exist today other than Ready Player Me out of Estonia.
And just to give the audience a couple of examples of that, I mean, we're talking about in-game currencies, which again have been around for a long time. We're talking about weapons, powers, land.
Kind of like in-game assets and currencies. So Axie Infinity is one of the better examples, or if you all know Zed Run, it's a good example of a play-to-earn game where people are racing horses on the blockchain, and then the digital ownership of those thoroughbreds, the provenance, all of that sort of follows the horses themselves. So that's a sort of a few kind of good examples of what current play-to-earn looks like.
And Zed Run's an interesting one, particularly for a gambling audience, right? It'd be interesting just to unpack that a little bit more, because it definitely feels like it was ahead of its time, or still is, I think, probably ahead of its time. And this really does come back into this idea of ownership, right? Being able to own horses, digital horses, breed those horses, create other horses, race those horses, and win, right? So there's that kind of ownership, there's an economy, there's a prize.
There's actually another part that's really interesting about Zed. I can kind of reveal some stuff, but not too much stuff, given my stake in Zed Run. But one interesting thing is like legendary horses. If you go to some of these horse races in Australia, like the Melbourne Cup or the Kentucky Derby or whatever, there's like legendary horses that have gone on to sort of retire, right, out to pasture or whatever. Imagine if you had a digital version or digital twin of that horse that sort of followed its kind of career, took all its kind of attributes.
The physical in real life.
Physical in real life horse,
yeah.
And then you've now immortalized it digitally, and you're the owner of that physical horse. I mean, that's pretty freaking cool. Like the idea of doing that, right? And that's one future. The other future is just full-on gambling on these. Excuse me, just full-on gambling on these horses online. Working with iGaming companies, working with licensed operators, and giving them access to the APIs and the data so that they can derive their own odds and tickets and that sort of thing, and just take bets 24/7.
Yeah.
It's so much better than those stupid little terminals that you see, those animated horse things.
Yeah,
It's a million times better. Yeah.
So that's going to happen, right?
Oh yeah, 100%.
That's going to happen. And what's stopping that happening? Is that regulation currently, or is it lack of innovation, or?
No, listen, it's a bit of regulation. It's the fact that Zed is a startup, and they grew very quickly, and they just had to find the right partners, to be able to do this. But this is a massive opportunity for any larger gambling company to make an investment, or like a strategic investment, and take on that IP. I'm serious. Like it's just like it's a huge opportunity. I don't know when it's going to happen, but I think it's going to happen this year.
Okay.
Sorry, I don't know who it's going to be, but I think it's going to happen this year.
You heard it first.
Yeah.
And what's really interesting around Zed is it's not just an in-game race yourself, which you can own the horse on, but you can bet on the horse. In some aspects, it can be considered a game of skill in some states. And of course, as it becomes more well-known, you can start offering odds on these metaverse games inside your actual horse book. So you can take additional layers of abstraction in order to monetize in different ways.
I think, from the point of view of an operator, it definitely raises regulatory concerns as to exactly how this would play out, how you'd run it. I think it's going to take a lot of investigation on the part of regulators to really understand this, but there's a huge economic driver behind it. So I think Russell's right. Someone's going to figure it out in one market or another.
What particularly do you see as the red flag? Is there any one thing, or it's...
Well, when anything that's new and that's not defined, what are the odds there? How is it actually run? what regulatory structure does it actually fall under?
Yeah.
It's challenging to get new regulations passed
Sure.
and to expand the definitions of gaming.
Yeah.
So does it fit an existing regulatory structure or not? And if it doesn't, what is it? And then if it doesn't, that means you have to have an entire new regulatory structure created around it. Or if it's perceived to be in violation of existing law, people will eventually come after it, just like the skins. The skins were thriving in skins trading in Counter-Strike. It wasn't just because it was magical and people loved to have the skins. It was because there was a massive secondary gambling market that people were having a really fun time with.
Yeah,
But it was blatantly illegal gambling. And
Yeah, but this is horse racing, digital horse racing, just online. It fits within current regulations. They just have to make it fit. The biggest concerns would be things like, how does the black box or RNG work? That type of thing. Who has access to that information? Nobody should. Stuff like that.
But that's
So-
technical, right? And to your point, regulation is glacial. It takes time when it's something
and
new.
regulators don't like black boxes.
No.
Well, but it's not just black boxes. I mean, you've said that the outcome of the race for Zedrun is determined by an RNG, which makes it a casino game. This is an Australian company operating in Australia. The IGRA very clearly says RNG games are not legal in Australia. I mean,
So does it get regulated under a casino license?
I think that their easiest path to scale in the market would be to get regulated under casino licenses. But I'm not in that business.
No. I mean, so interestingly, Sorare, the founder of Sorare, I think this week or last week, was talking about special regulation for what they're doing.
Yeah.
And there are others like that because, as far as I'm aware, they're still under investigation in the UK with the UKGC, I think maybe in France as well.
In France, they've done a deal with the French regulator to allow them to operate and change their terms domestically. And in the UK, they're still under investigation, as far as I'm aware.
Okay. And then they're quite present now in the US. They've done deals with basketball, baseball.
Yeah. That's as far as I know. Yeah, basketball, baseball. I think they are working on something in NFL, but I don't know.
Okay.
Yeah.
Because I think that's super interesting, right? And again, DraftKings with their Rainmakers, taking, again, I guess a bit like Michael was saying, something in the real world, which is fantasy, enabling ownership through NFTs, and then paying in a cryptocurrency, again, would feel very analogous, very close to the gambling audience.
It's fun, it's entertaining. If you're a sports fan, you want to own your Tom Brady, you want the opportunity to participate in contests with him. People are innovating. And the pace of innovation goes much faster than the pace of regulation. And so you have a gap where inevitably somebody needs to catch up. But in the meantime, there's a lot of opportunity for entrepreneurs to create really amazing products.
Yeah, although, having been in this space for 4 bull markets and bear crashes, I'll tell you that every single time the opportunity is so fast and it just grows so quickly. 98% of the stuff that's created is all trash. A lot of it are scams. And then now you have FTX. Thanks, FTX, for basically, embarrassing us again and then giving us like 2 years at least of like hell that we have to deal with, right?
Yeah.
This area in general, just crypto and NFTs, that sort of thing, people hate it, and then when the market starts to take off and the bull run is happening, everybody wants to talk to us. It's very frustrating, but for those who build, like us, who build in the space, really understand it, we're creating value for our investors. And when I say investors, I mean actual equity investors. And we're creating a really, really great experience for our customers. And in 2 years or 3 years, you'll look back and you'll say, holy shit, this is an amazing space. Like, why is this room so empty? I was there when I saw this happening. And you're just going to see it happen again. Like, the industry has a short memory. And there's going to be another larger wave of people coming into the space in 2 to 3 years than there was this time. And there's going to be more scams as well. So
I agree.
And so, talking of regulation, we've touched on it. I mean, how should regulators be approaching this? And indeed, how are they?
So you want
I'll
to go
say
ahead?
there's a lot of interest and a lot of investigation, a lot of trying to understand not just this topic, but anything that pushes the boundaries of at the intersection of technology and creativity. Regulations follow, right? They don't enable. And the other thing that I think is hard is, it's not like this is one simple, easy to define, category. Companies are doing very different things, across this space. And that's one thing. The category is so broad. I think you're more likely to see if someone was going to try and regulate it, specific things that they can understand, that they can put under specific definitions of perhaps existing RNG style casino regulation. But, one change in the game structure would make that not apply at all.
Yeah.
Maybe it's a game of skill, which you can pretty much verifiably prove with many of these games, depending upon the state it's in or depending upon the country. So I think that's going to be a lot of investigation. There's going to be a lot of uncertainty as to who would regulate it if it was regulated. Does it need to be regulated or not? I think a lot of those are open questions.
Yeah, I think there's a lot of startups who just assume, and I previously worked for a VC fund, Drive by DraftKings, and we got pitches all the time from startup gaming companies on blockchain. They were saying it's not gambling, it's fully distributed, it doesn't need to be licensed. They're wrong. You ask any regulator in any jurisdiction if any form of gambling in their jurisdiction is subject to their oversight, and they will say yes, without any ambiguity around that. From our business, though, we're not necessarily just focused on that, because that's not what we're in, but we spend a lot of time focused on VAT applicability in respect to primary and secondary sales, data privacy. If all we know about a customer is their Web3 wallet address, how are we supposed to determine the applicable tax on that? And so we've had to engage with a number of authorities in that space in order to figure out how we're going to navigate those waters.
And is that tax liability on the gamer, or is that on the game developer, or is that
it's not necessarily tax liability on behalf of the game developer. On a primary sale, we're the merchant of record, and so we're responsible for remitting VAT in the jurisdiction of the seller. But if we don't know what jurisdiction they're in.
Yeah. And I'm not a big fan of regulation by enforcement. I don't think anyone is. The SEC is really good at that, but the gambling regulators are actually a lot better, to be honest. They're many of them are a pleasure to work with. Some of them aren't. And I would just say that I'm a believer that you kind of have to build and break things. And the regulation should not be driven by the regulator. It should be driven by the big operators who have relationships with regulators who want to innovate. And, like my last company, Unicorn, we started it in 2014. We started building on blockchain in 2015. The company completely blew up. We were going gangbusters. And in 2019, the crypto economy collapsed, and the SEC started making inquiries on some of the, like our coin in particular. And so, I went through 2 years of regulatory hell, just answering questions and paying lawyers. We didn't do anything wrong. There's people in the SEC who wrote, a blog on, saying unicorns actually, we thought they were doing things right. It was weird. And then in the end, I just said, enough is enough. We're paying too much in legal fees, that type of thing. I have this really great lawyer in the gaming industry who I reached out to and said, I need you to fix this. And so we ended up, paying a fee to the SEC and rebuilding, just focusing on the core business. And then eventually we got acquired by Entain. I think Entain is a company and even DraftKings, I think these are companies that are really forward-thinking, and they're willing to make investments in areas that are sort of new and interesting. And these are areas that are going to be the future of their business. So it'll carry them, 2-3 years from now. they're going to look back and say this is probably one of the best investments they made. So.
Because they got in early.
Yeah.
They're willing to learn.
Yeah, they got in early. They have amazing talent on the team. You know, they really are looking at things like how to use AI, you know, in their products and things like that. Like it's smart, right? So
Yeah.
They've also got, the great thing about those particular operators is they have incredible awareness of and finesse with regulatory.
Right.
They know how
Sure.
to do regulatory. They understand it. None of that's new to them. Right?
Yeah.
They can help regulators understand the education programs. They can work with them to open up those doors. In some cases, I think it does take that level of expertise, knowledge, and industry power
Yeah.
to drive something like that. It
Yeah.
might not be something that a small operator can do, because I've seen companies too launch, and I've seen them on stage pitching, and the audience, half the people in the audience are like, that
sounds illegal.
That sounds illegal.
Yeah.
Everybody looking around, yeah, that's definitely illegal. But they have no idea
Sure.
that what they're doing might be in violation of a law that they've never heard of because they came from outside.
But it's kind of a bit of an intersection, right, between potentially gambling and securities law, depending
on what you're doing. Like if you're like the space, you got to be really careful. You know, when you're building economies, for example, you talk about play to earn. Let's go back to this for a second. All of the play-to-earn games that came out in the last couple of years have built mini Ponzi schemes, right? It's unfortunate, but the way it works is the more user growth happens, like the higher the token price, and then when the user growth stagnates, the whole economy falls apart. You don't build an economy producing coins out of thin air, right? Like if there's no fiat going into the system, real economies are built with human production, human output, right? And we wrote a white paper on this, almost 2 years ago now, and it is it's on how to build a 100-year economy in a game like this, and the way you need to do it is you need to have fiat coming into the system, and every time a coin is produced or given to a customer, that coin needs to be produced from some sort of value input from a human, like work. It's almost like mining. You have to be able to do that to produce those coins. So there's real intrinsic economic value within the game itself. And there's good examples of that are off blockchain. Like I was saying yesterday, Second Life is a really, really good game to look at to see how they built an economy that wasn't on blockchain, right? So yeah.
And that was 15 years ago.
It was a long time ago.
20 years ago.
Yeah,
Still, I mean, thriving.
Yeah.
People made careers in that market, and fiat in, and right, you can earn money, doing it, and there's people created all kinds of interesting things in that environment, including originally casinos that were shut down, right?
Yeah.
That's right.
But there are others too, Entropia Universe and others like that, where I don't know if play to earn or is experience or create to earn, but people would create assets and sell them to others.
Yeah, a lot of those games are phenomenal, and amazingly credit to Linden Labs for still having Second Life up and running. But I think if you talk about play-to-earn games on blockchain, a lot of the games have just not been very good. They haven't been entertaining. They haven't been fun. They've effectively been, geared towards financial speculation and gold mining, and Vietnam, Philippines, a lot of Southeast Asia, where they have factories who are just going through Axie Infinity, for example. Now what you're seeing is a mainstream shift towards, VC investment in AAA and AA game studios to build top-tier games.
Yep.
Look at what is being built on Polygon and on Immutable right now in respect to Illuvium. There's a company called Bright Star Studios out of Denmark that's building Ember Sword. They sold real estate in advance, and I think they raised $60 million from doing this. It's non-dilutive financing, but effectively all the people who bought that did that because they want to have a presence inside the universe, which is going to launch like Ultima Online. You look at Illuvium, Guild of Guardians, Gods Unchained. These are very big titles that they'll be rolling out in the second half of 2023, and I think it's going to be a shift in the consumer appreciation for what benefits Web3 drives into the ecosystem, because they're going to be great games.
Yep.
And if you think about all the VC money that's going in there to help fund these projects, it's in the billions of dollars right now, because people are betting that this is going to be the future. And AAA gaming, video games, is a $60 billion industry.
Yep.
So I think they're going to be adopting and embracing this technology significantly.
Yeah, no, and I know Andreessen Horowitz have invested into Rahul, and I think they've got a pretty big portfolio, do they not, in terms of...
They do. I was just going to say AAA gaming is bigger than 60 billion. I mean, that's like Activision. You know what I mean? It's way bigger. But yeah, Andreessen Horowitz invested in us. We raised $45 million just a little over a year ago to build this. Our game is basically an AI-driven game where there's no user input. We're creating a futuristic cockfighting game, like a digital cockfighting game, where these robotic cocks and hens from the year 2140 fight in the Coctagon, and you can. Each of these cocks and hens are artificially intelligent NPCs, and they're like pets. It's sort of like a Tamagotchi. And what's cool about it is the users build a relationship with the characters that they own, and we keep the full provenance of these cocks, on the blockchain, talking about like their professional fighting history, their total earnings, amateur fighting history, that type of thing, and then you train them. You train them to do like stupid things like dancing and like katas and stuff like that, and then you breed them in this game called Hender. You swipe right on the ones that you want to breed with, yeah, it's really ridiculous. Like the whole concept is like the dumbest idea I've ever had. Let me be honest.
It's slightly backwards, but this is the future.
Yeah, this is the future. I know it sounds ridiculous, but the fact that we're essentially an entertainment tools company. We're building a tool that lets people take text and 2D images to create fluid animations. So think of it like ChatGPT for animations. And we're using those tools to create Mecha Fight Club. And Mecha Fight Club is like our Halo product that we're going to showcase to people. And what's neat about it is, it's sort of like... people will own these birds, and they'll watch these fights, and they'll be betting on the outcome of these fights. Not on our platform. I don't want to be in the gambling business anymore. But what we will do is we'll be very friendly to gambling companies who want the vision, who want the data, who want the interface to be able to take bets on their platforms. We'll be sort of like a gambling friendly game publisher.
Cool.
Yeah.
That's super interesting. Very quickly, because we're over time, just a single soundbite from the other two. The future, 5 years. What do you see this space being? How big do you see it being? How do you?
I would be guessing to give you a number, but I feel that incontrovertibly you're seeing a major shift for a lot of technology, a lot of games towards not just blockchain, NFT, Web3. I think that we're at the very earliest stages of this, despite what we've seen as far as the huge spike in 2021. You're going to see a lot of growth and mainstream adoption moving forward.
I think exactly that. I do think, however, that we're going to see ups and downs, because as things bounce back and grow and expand, there's a lot of Wild West. There's a lot of dumb stuff going on out there. And there's a lot of people breaking a lot of laws. And there's a lot of Ponzi schemes. And somebody does something, it blows up, and everything collapses again. So I'm not sure in exactly 5 years if it's going to be down. I think overall, the trend is going to go up. And I think it's going to be driven by some of the major players partnering with groups like Rahul's to really drive this. It's going to take that level of creativity and financial backing and industry power to really just explode something that people can all get behind and define it, and sort of, shut down a little bit of the Wild West so nobody blows up and sets back the industry for 3 or 4 years.
Yeah. We'll, I think, agree with that. So thank you very much to the panel. Thank you, Rahul. Thank you, Jeffrey. Thank you, Jamison. That was great.
Thank you.
Thank you.
Thank you.
Yeah.